Every Saturday, we do a live stream here on our Stock Unlock YouTube channel. One of our viewers brought up a stock MCB or Metropolitan Bank and asked us to take a look. To our surprise, MCB has been outperforming the S&P 500 and has very high Stock Unlock insight scores of 4.63 out of 5. The stock is also currently in a 40% correction and selling for a price to earnings ratio of under 10 now. In today's video, we are going to take a quick look at MCB to see if it could be a stock to buy. But before we get into the video, I just want to let you all know that Stock Unlock has a 20-step free investing checklist that you can download in the description. It will help you know what to look for and help you find better investments. Alright, but back to MCB. This is a bank primarily focused on New York. The bank's mission is to offer a full range of banking and innovative financial services to businesses and individuals. They also have a branch of the business called Global Payments, which provides banking as a service to high-growth leading fintech partners. MCB essentially provides these businesses with banking services and allows their customers to act more like banks themselves. So what we're going to do now is head over to Stock Unlock, and we're going to take a look at MCB's insight scores, which is one of the first things that I like to do here. Right here we have our bank-specific metrics that we focus on and grade in Stock Unlock if we are taking a look at a bank. And we can see that it has a score of 4.7 out of 5, which is almost perfect. The total deposits are increasing very nicely. The interest income is up 37% year over year. Non-interest income increased by 80% year over year. Loans increased by 27%. Tangible book value per share is up 21%. Return on tangible equity is about 14%, and the efficiency ratio is 0.46. So it's a very efficient bank. When I take a look at these bank-specific metrics right here, this is incredible. This bank is growing so dang quickly, it doesn't even make sense. This is the fastest growing bank I've ever seen here on Stock Unlock, okay? If we scroll down to the financial health, it's a 3.5 out of 5. The company has very low intangibles on the balance sheet, so all of its assets almost are real tangible assets, which is very good. However, the shares have increased by over 20% over the past year, so they have they have done some dilution. Don't know why that was so hard to say. But yeah, that is something investors should definitely know, is this company did raise money and dilute shareholders. Now, if we take a look at the growth, it's a perfect 5.0 out of 5. Revenue has increased by 42% over the past year, guys. Think about this. This is a bank. Usually banks grow their revenue by like 10 to 12% a year on a good year. This bank grew its revenue by 42% over the past year. That is incredible. Net income is also up 61%. Book value is up 58%, and tangible book value is up 60%. The last thing that I want to talk about is that analysts are very bullish on the stock as well. They're expecting the EPS to grow by 44% next year, revenue to grow by 32%, and they have an average analyst rating of 4, which means that analysts on average think that the stock is a buy. And on average, analysts have a price target 71% above where the stock is currently trading. Analysts look like they are very bullish on the future of the stock. It is growing incredibly quickly. It is diluting, so that is something you got to know. And in terms of all of its bank-specific metrics, it is growing incredibly well as well. The next thing we're going to do is take a look at this company's revenue. And we're going to take a look at their quarterly revenue, because in 2016, it looks like they were doing about $11 million in revenue a quarter. And now they're doing about $62 million in revenue a quarter 6 years later. So they have essentially 6x revenue in 6 years, which is a very strong growth rate. Now, if we also take a look at the trailing 12 months, in 2017, in the trailing 12 months, they did about $48 million in revenue. And in the trailing 12 months now, they've done about 220. So they've about 5x their revenue, their trailing 12 months revenue, over the past about 5 years, which again is very strong growth to this bank's revenue. So if we take a look at the net income, this is the same story. This bank's net income is growing incredibly quickly, and the net income has it's 12x'd. Yeah, 12x'd over the past 6 years. And in the most recent quarter, they did a record amount of net income at $23 million. So again, everything with this bank so far looks like it is growing incredibly well. Now, if we go and take a look at the company's assets, what we want to take a look at is the total deposits right here. And what's interesting is this bank's total deposits are not sitting at a record high. They were sitting at a record high at $6.4 billion at the end of 2021, and they've come down slightly by about 3% over the past 2 quarters to about 6.2 billion now. So what I did is I went over to the company's investor presentation and I wanted to know like what is going on here. And this is kind of what I found. So Global Payments, that one branch of the company, this is their diversified revenue and deposit contribution. And we can see right here that the total average deposits by category for their Global Payments branch of the business is mostly crypto. It's about 70% crypto. And in the past couple of quarters, their crypto deposits have really been coming down. This is probably because the crypto market is just downright tanking and it's really down. So I imagine that their customers and their clients, crypto, just the value has gone down. Also, one thing to note about this bank is that it is involved in the crypto space. I mean, this right here, we can see that the total deposits of Global Payments Group significantly grew in 2021 because of crypto deposits. So that's just definitely something you got to be aware of if you're taking a look at this business, is that they are involved in the crypto space, and crypto does make up quite a significant portion of their business and of their total deposits. Me personally, I'm a value investor and a growth investor, and I don't really like crypto that much. I don't love to see how exposed this business is to crypto. That's just kind of my thing right there. But anyways, if we take a look at this business's book value or shareholder equity growth, we can see that it has been growing consistently over time. And it did jump quite significantly by about $180 million from the second quarter to the third quarter in 2021. This is when the company did their dilution, and they diluted about 20% and they raised about $175 million, if I'm remembering correctly. I actually have a screenshot right here of the dilution. So yes, they raised $172.5 million, and the company plans to use the net proceeds from offering for general corporate purposes. So it wasn't for like an acquisition or anything. The company just wanted more money, essentially. They just wanted to raise more money. That honestly was kind of interesting to me, that they just kind of wanted to raise more money from the market. And keep in mind, guys, this is a $748 million company today. That's the market cap. So $172 million of dilution is a significant amount of dilution. And again, they didn't really raise it for an acquisition. They didn't raise it for any specific thing. They were just like, we just want more money, essentially. So they raised the money when their stock price was all the way up here last year. And in hindsight, I mean, it looks like it was a good idea to raise money while their stock was high, because now the stock is down that like 40%. That's just something that you should all be aware of, is that this company did do some dilution. Now, what we're going to do is head over to our freeform tool, and I want to show you all the price to earnings ratio of this business and how it has been performing over time. So first off, this stock came to the public markets in 2017, and it was kind of volatile back then. So I want to take a look at the price to earnings ratio from 2019 over the past 3 years. And we can see that the average price to earnings ratio for this business was about 11.76 over the past 3 years. And right now it is trading for a price to earnings ratio just below 10. So it's selling for about a 10 to 15% discount from its average over the past 3 years. And this is probably because the entire banking sector is kind of being hit right now, and it's kind of being sold off. Now, if we also take a look at this business's price to book, which is how a lot of investors like to value financial companies, we can see that the average price to book was about 1.3 over the past 3 years, and right now it's about 1.32. So if you're looking at the book value of this business, then it is selling for about average. And if you're looking at the earnings, then the earnings look like, or the price to earnings ratio looks like it is selling for below average. But take a look at this, because if we take a look at the revenue and the net income that this business has generated over the past 3 years, I mean, revenue has grown at a compounded annual growth rate of about 37%, and net income has grown by 41% compounded annually. So this bank is growing incredibly quickly. Yes, they're in the crypto space, and the crypto space had like this massive boom over the past couple of years, but this is still phenomenal revenue and net income growth, especially for a business that is selling for a price to earnings ratio below 10. That's pretty awesome. So it definitely looks to me like an interesting company. And what's also interesting is recently insiders have been buying more shares of the business. This insider right here, for example, Patent Robert C., who is a director of the company, increased his position by 46% recently. And insiders have been buying tens of thousands of dollars worth of shares in about May. So they look like they have been buying the dip on MCB. So let me know what you guys think about MCB down in the comment section below. The one hesitation I have about this bank is that it is involved in the crypto space. If you guys know me from my main channel, Daniel Pronk, I am not a fan of the crypto space. So that just kind of makes me a little bit uneasy. But if you're taking a look at the valuation with the price to earnings ratio under 10, if you're taking a look at the revenue and net income growth and how quickly this bank is growing all of its bank specific metrics, it looks like a freaking awesome bank. Seriously. So add this one to your watch list. Go and take a look at it. Let me know what you guys think about this one down in the comment section below, because it's a strong bank. It's growing quickly. It's outperforming the SPY, and it does look like it could be selling for a discount right now. It also has very strong stock unlock scores. So yeah, again, let me know what you guys think in the comment section below. Also remember to leave a like on the video if you enjoy this kind of video and you want to see more stock market related content. And also, if you guys want our 20-step free investing checklist, then there will be a link in the description. And you can also get a 14-day free trial to Stock Unlock, which is the platform that we are building here. And yeah, also we do those live streams every single Saturday. So if you guys want to tune into the next live stream, make sure to turn on notifications and subscribe to the channel. And you can come and join our live stream, ask us questions, and we'll do real-time stock analysis with you and take a look at whatever stock you want. So yeah, it's a good time. Our channel has been loving it, and just come and join us for our live stream. But that's going to wrap up the video, everyone. So thank you so much for watching. I truly do appreciate it. And I really hope to see you all again in our next video.